Welcome to A Canadian Investing in the U.S., a podcast and YouTube channel focused on Canadians buying real estate with host Glen Sutherland.
Welcome to a new episode of Canadian Investing in the U.S. with Glen Sutherland. This week, my repeat guest is Tim Miron. Tim, let's first start off with just doing a quick introduction for people who are like, hey, who's this Tim guy?
Yeah, for sure. I am the founder and president of Pursuit CPA. We've got offices in Burlington and Fonthill, Ontario. We specialize in dealing with entrepreneurs, and particularly entrepreneurs or cross-border real estate investors who are doing stuff on both sides of the border.
Yeah, and if you guys have listened to this podcast for a while, previously I was working with Pursuit CPA, with Leap ACT, and Pursuit CPA has acquired them, and I have moved my business over to Pursuit, so it'll all line up. And if somebody was like, hey, I'm interested in doing like just an introductory call or just getting some information, is there an email address that they could go to right off the bat?
Yeah, the best one for that, to make sure you get the fastest answer, the email address is crossborder@pursuitcpa.ca. For anybody who's from your audience, that's wanting to talk about cross-border tax issues, we'll make sure that gets routed the right way and we get the appropriate introductory call and people talking to you as quick as possible.
Perfect. Okay. Tim, what I wanted to do, because we're in the tax season right now, we're in March. We're talking about filing taxes, paying taxes. What I really wanted to dive into this week is, what do you do when you get an unexpected tax bill? So I'm going to say it's probably on a high side rather than a refund side. Is, if people have an unexpected refund, I don't think they're going to have an issue, and they're really going to look at this. Yeah. It's going to be the other way.
You could just always buy a thank you gift for your accountant if your refund's bigger than you thought it was. Yeah.
Yeah. So what do you suggest, or give us some insight from your side on this?
Yeah, and I've got a few things, because we are recording this now in March, and so most of the things that you could do on either side of the border to change your tax bill, you probably can't do anymore. So now it's just a matter of figuring out what the deal is and having to do it. Those are things like retirement, contributions, donations. All of those things have timelines that are now passed, and so your tax bill is what your tax bill is going to be.
Okay.
The first and biggest thing that I would really encourage people to do is, if we feel like, or we know we're going to have a tax bill, human nature is to want to avoid it, because taxes can be scary. Paying a lot of money can be scary. As a dude who can calculate his tax bill within $100 9 months in advance, I still hate paying taxes, even though I know what's coming. So you're not alone there. But if we've got some fear and some anxiety about it, don't avoid it, because the sooner you figure out the number, at least now you can come up with a plan to deal with it. The other part is, a lot of people who are scared of the tax bill just avoid filing their taxes, and that only makes it worse, right? Because now you're not just, I have to owe tax. Now I've filed late, and I have late filing penalties and interest, and those are two separate things, which I want to clarify. But if we can avoid the late filing penalty,
yeah,
that's a big tax savings, right? Like the first time in Canada where you file a tax return late, the penalty is 5% right away. So if your tax return was due on April 30th and you owed $100,000, it's now $105 on May 1st, plus 1% per month. And then if you're late a second time in 4 years, it gets double. And so those things can get nasty. So even if you don't have the money to pay, filing your tax return makes the amount you're going to pay lower. So those are the late filing penalties. Same kind of deal on U.S. filings. Interest is the thing, but then how we deal with that and how we pay that, that's just part of business. If we didn't plan appropriately and we get surprised by a tax bill that we don't have the money to pay right away, still number one goal, or my number one recommendation, is pay on time.
People are saying, hey, when is on time? When is the tax filing dates for corporate and for personal?
Yeah. So U.S. corporate stuff and U.S. personal tax stuff tends to be April 15th for a lot of those things, is the first spot. Again, U.S. returns can often be extended, but they really want their money up front too, or at least most of their money up front. Okay. And there's a bajillion extensions in the U.S. Okay. We won't. Yeah, that would fill the whole podcast to go over all of those. So we'll save that one for another day. In Canada, your personal tax return is probably due on April 30th, unless you or your spouse are a self-employed person, not an incorporated person, but like a sole proprietor, realtor, or something like that. You get an extension to filing your return to June 15th. However, the money's still due on April 30th. So our goal is always to get everybody's personal tax returns done where they cooperate with us by April 30th, so that if you owe money, we can get it paid on time. Okay. And also, come May, I've had enough of doing personal taxes. I don't want to be doing any more of them.
No kidding.
So those are the personal deadlines on both sides of the border. Corporate deadlines are most likely 3 months after your fiscal year end. Again, the U.S. ones, all of the year ends have to be December, so that's the April deadline. But if you've got a December Canadian corp year end, if you owe income tax, it's due by the end of March. But we still have to the end of June to file your return. And if you don't pay by March, there's no penalty, there's just interest. But if we don't file by June and we owe tax, that's when the penalty happens. And if you have a different year end, if you have an August year end, the payment deadline was November. So three months after your year end is when the money's due, and then 6 months after is when we have to hit the button on your tax return.
Where my mind is going, which is not what we were planning on talking about, is just some of these timelines don't match up nicely. So if your US return has to be done first before you do your Canadian return, and if your CPA is filing it on April 15th at the deadline, but the money, if it was set to flow up to your, like, say, Ontario Holdco, and that's due at the end of March, you're actually going to be late because your accountant in the US hasn't filed the first part, so you can file the second part. Are you looking to invest in the US? Are you looking for a coach rather than a coaching program? Well, you're in luck, because that's where my coaching program is completely different. It's not about just teaching you all the material. It's about like having a community of people all doing the same thing. It's about doing one-on-one calls with me to strategize, to plan, to look over deal analysis, to check markets with you. Just honestly, just to solve mistakes before they happen. If that's interest to you, you want to learn about the coaching program, or you just want to do a one-on-one call with me just for like 10 minutes, just to answer a couple questions, just to get to know me, go to my website, glensutherland.com, or CanadianInvestingInTheUSA.com, and you can book a call right at the top. And I'd love to get on the phone with you and just even get to know everyone. Do you see that as an issue that happens often?
That certainly can be the case. And so the other part is, we were talking about surprise tax bills, ones we didn't see coming. If it's a repetitive routine business and that corporation's owed tax in the past, so let's just hypothetically say your Canadian company owed $6,000, because now I can do the math real easy.
Okay.
The CRA is going to say, please give us your $6,000. We'll take that right away. Thank you very much. However, we will now assume you will owe $6,000 again next year, all things being equal. So on top of the $6,000 you're going to give me right now for 2025, I want you to start also giving me $500 a month for the rest of 2026 to go towards 2026 taxes that you'll file a year from now. And again, so if in a stable business where we have what you're talking about, of, hey, if I'm not getting my US stuff to figure out what I'm paying in the US, we're just taking some really as best educated estimates as we can. Again, keeping in mind that if we're off, as long as we file on time, but we're off on the payments, we're talking, a 5% interest rate, which if we can avoid, great. And if you've got the cash flow, we have lots of clients who actually choose to intentionally overpay, because the CRA will pay you back. Now, they won't pay the same 5% they will charge you. They'll only pay you 1 or 2, but it's, for some people, if they've got the cash, that's still a better alternative than.
And sometimes it's just about making every month predictable, because like some people, depending, like you're talking about a $6,000 bill, but what if it's a lot more? Like sometimes it's just to avoid the shock at the end of a big bill, that you're like, sometimes it if you break it up or make some prepayments that when you have money, it's, you're gonna have to pay this. It's technically owed to them. It's either, at least the way I look at it, I want to put it into a savings account or something. Maybe I'd earn some interest on it, or I'm going to just get it to them ahead of time so that it's It's just done. It's just
Yeah.
like it's just like whenever I'm going and doing like property taxes on my rental properties, if I can do a monthly payment, I'd rather do that than an annual payment because it's just gonna come off the cash flow. It's not gonna be that shock at the end. Same thing with
Absolutely.
insurance, same thing with everything. If I can break it into a monthly thing, I can make a monthly statement, I can see how we're operating, and it's a lot simpler. Anyway,
No, I
sorry
agree
about
with
that.
that.
I kind of derailed you from what we were talking about.
No, that's all good. And I do the same, right? I have a corporation with a Canadian rental property, and the rent shows up, and the next day automatically my HST just goes to the CR, even though that's not what's required. I'm like, I just don't have to think about it. So I agree with you. Um, yeah. So we talked about filing on time is goal number one. Goal
Yeah.
number two is then how quickly can we pay down the surprise tax bill, and what are the other alternatives? If it's really, really big and there's something really significant that has happened, can you work out a payment plan arrangement? Yes. Those tend to be really formal. You get a collections person assigned. If you miss a payment by a day, they will call you. So if it's that serious, let us know. We'll help you with that and make sure that we understand what that is before you agree to it.
Okay.
Because missing one of those, yeah, they don't like that.
No.
Ideally, you get it cleared up before it gets that far, because those tend to be a few months from now before then. So my next answer to people is, well, let's figure out what is the debt we want to carry the most. So CR interest is 6 or 7% right now, non-deductible interest because it's for taxes.
Yep.
Is there somewhere else where I can access money, home equity line of credit, refinancing something, where I could use that to pay the tax bill and the interest rate is lower? Still a surprise debt, still a thing. And again, if you can access something that is tax deductible debt, like a rental property, now we've taken 6 or 7% non-deductible interest, paying 4 or 5% where I'm going to get an interest savings, and we probably chop the interest rate on that unexpected bill, by 2/3.
Yeah. No, that makes a lot of sense. When you were first, I'm gonna completely derail you again, but I don't know if you know what you think. But off the start, you said you could use retirement contributions if you hit before the deadlines and stuff. That would only affect like your personal returns, correct?
Correct.
That's not going to affect any of the corporate returns or the U.S. returns at all.
Correct. Yep.
Okay, all right. I just wanted to double check that because I'm pretty sure I just went against that. I haven't done my own taxes in a few years, so many years actually, but I used to do them. Okay. Was there some other things like you can do if you get this unexpected tax bill?
So figuring out another way to pay it where we're not paying the government a high interest rate is step number two. If you have to get to it, some type of payment arrangement, and we've got clients in all different kinds of businesses who are in that kind of spot of like, hey, they're 3 years behind on their HST, and we've worked at a deal where they, as long as you keep current on your new sales tax, we can then make a monthly payment for a year and a half to get the old stuff cleared up, if special circumstances have happened. There's a couple of ways to do this in the States too, but in Canada also, if there was something that like significant that caused this, hey, I have a whole bunch of money owing and I don't have the money to pay it situation, which is not, I went and bought a new boat. That one's not going to sail. Pun intended there. If it was something significant, there are departments in Canada, it's called taxpayer relief, where we would right away and say, hey, the money, this happened because somebody got sick. We had to spend a whole bunch of money on medical bills, or I lost my job, whatever the answer was, where you can right away to ask for interest relief so that you still owe the tax, but you don't have to pay the interest, is something to consider. Again, if it was not otherworldly, but a thing that was outside of your control that caused you to be in this spot. So those are the things. Yeah. Finding a way to pay it off. And then the last thing I wanted to mention is if it happened once, how do we start being a little bit more proactive about our tax planning to prevent this from happening again in the future?
Yeah. So like I guess it's going to be, I can't really ask a specific question about it because it's going to be depending on what happened. But like if you found that it's like you said, something caused this, like maybe there's some way to prevent this. Maybe there is write-offs that we didn't take that we could apply. Maybe I think it's just going to come down to like doing a review of what happened. And maybe I'm assuming you don't want to do that during tax season. When would you do that kind of review? Is that something you do in the summer, or what makes the most sense?
Yeah, we got lots of time to have those kind of discussions in midsummer and early fall,
Yeah.
where there's still a couple of months left, where again things can do that. And so, if you're having that conversation in August or September, there's 3 or 4 months left to go until the year end. So maybe we don't have a super clear picture, but the more important thing is there's, at the end of September, there's 4 months till the end of the year, but there's also 4 more months until the next tax bill is done. So you're still really looking at like planning ahead 8 months in advance.
Yeah. And with a lot of this stuff, especially if you're doing something new, like you might want me to edit this out of the podcast, but like a lot of times I will send a message to my CPA, and I'll be just like, hey, I'm buying a new truck. You know my tax situation. Does it make sense to buy this personally? Does it make sense to put this in the corporation? Does it make sense to lease it, finance it, or to buy it in cash? Just give me like a quick answer where to put it and how to pay for it, and then I'll go do it.
Yeah. No, and that is the most common question we get asked as accountants all the time is, I'm buying a new vehicle. Yeah. I've considered
Awesome.
getting my dealer's license going. I say, well, I'll give you the answer if you buy the truck off of me.
Side business, he's like, I'm always looking for complementary businesses. I wouldn't have thought that selling trucks as an accountant would be a complementary business, but hey,
Yeah, no, that's not coming down the pipe anytime soon.
No.
But yeah, so those types of questions are good, and then knowing those things, right? Like if you're like, hey, I want to know if I should buy my truck in cash, but I also happen to have a surprise tax bill from last year that I'm working down. Well, my thought would be, let's finance that truck and use that cash to pay down the tax bill. And so having those kind of holistic discussions of what's going on all across the board to make sure that we're shuffling the money that we're deploying in the most tax efficient way possible is part of what we love to do and help people with.
Yeah. And if you're going to do any of those calls with your CPA, you can correct me, but I think it's helpful when people are doing those calls with me about their tax or about their just real estate. It's nice to send them the questions ahead of time so they can be prepared. Because sometimes it's like, hey, it's based on your tax situation, and they have to go review a number or two beforehand so that they knew it. And so, like, I don't know, just respect everyone's time whenever you're doing this. So, Tim never told me to say this, but like that's where I always go. I'm like, if I know I have the question, maybe sometimes it might even just be an email. Then it might save everybody a little bit of time.
For sure. In our calendar appointments where people go and make appointments with my staff and myself, there's a spot to go, what do you want to talk about? And the more specific you are, like you described, the more prepared we are, and the more we'll make sure you didn't forget to ask something.
Yeah. Yeah, and it might even lead to a different question. And even myself, I was on a coaching call yesterday with one of my students, and as soon as I hung up, I was like, I got another idea. I texted him back, but I'm like, if I had I would have, if I knew what the call was going to be about beforehand, I could plan the whole thing out, and it would have just been in the list of things we'd address during the call. Awesome, Tim. Unless you have anything else you want to mention on this, if people are like, hey, I like this approach. We mentioned it at the start, but how do people get a hold of your company or to speak to you or just to learn more about their taxes or their cross-border situation? How do they go about this?
Yeah, for sure. Our website's www.pursuitcpa.ca, or if you want to reach out to us by email, it is crossborder@pursuitcpa.ca.
Perfect. Thank you so much for your time, like always, and appreciate the content.
Fingers crossed nobody gets a surprise tax bill this year, but if you do, let us know.
Awesome. Thanks.
That was a nice video. Bye.